Hi, this is Joseph. Today is Tuesday. It's September 20th. I wanted to make a quick update on the performance of the trade copier, give you a little perspective on expectations. Do you think that in most cases, that's what a lot of people say. They'll ask me the question, do you think you're going to be able to pass the evaluation in one day? So let me explain. So it is possible. It is very, very possible that the evaluation could be passed in one day. It's not always, it's not going to happen every day. I mean, every cycle, we go through times when the markets are in deeper levels of consolidation. It lasts for a while. And what I want to say is, and I don't want to turn this into a trading lesson. I don't want to do that. I don't want to, disrespect your time or anything like that. You're here to find out, how long is it going to take? Is it worth your investment and your money to sit around and wait for me to pass the evaluation? And then the cost that it takes to actually purchase the funded account. So that amount of time that price stays inside a consolidation actually builds a cause. That's what we refer to it as in the lingo that I use. The people that use sort of Wyckofian principles, things like that. We talk about it like that. So you'll see a base, or whether it's at resistance or the lows at support, you'll see a range of consolidation that is for quite an extended period of time. There's specific activity that develops within that range of consolidation that creates the ultimate breakout and then can help determine how far that move is going to go. And that really determines the tone or the strength in most cases of the trend. But that can all happen on different time frames. So you can see here, there are different, this is a 5-minute chart. This is US 30. And just recently, so I just closed out a little trade right here. Not a big opportunity. Can't expect a whole lot. It hasn't created that cause or that base, that range of consolidation that is required for most of the markup or markdown campaigns that we see. And those are usually initiated by, and I hate using this phrase because a lot of people throw it out there and don't even know what they're talking about, but smart money. What I mean by smart money, and it's interesting because Richard Wyckoff, if you're interested, he used the term composite man or composite operator. People use it interchangeably. And it's basically the individuals who have the ability to create a move and a breakout, a move to the upside, a move to the downside, those big trends that we all want to participate in. So you have to understand that there are individuals that can cause that. Whether they're actual individuals or groups or entities, banks, investment funds, things like that. So I can go all the way down the list. But you know what I'm talking about. The people that are well informed, that know how to move the markets and can manipulate price like this. So that's what I'm getting at. And on days like this, it's not likely to produce a really big reaction. So I have to be sensitive to that. There are a couple of different ways that I can calculate that and figure that out. Mainly just looking at the larger time frames. So it's not like a mystery. It just takes a long time to study this and to be able to implement all of this information. So this is a pretty decent trade. Now, if I get additional trade setups, I can either hold on to this trade longer and see what happens and then use some kind of a scaling out method if that's what I'm going to do, or use some kind of a support low that would identify that this whole move to the upside is over. It's not going to go any higher. Or is it just going to swing around one more time and try to go for the highs? These are the things that I'm trying to calculate. So sometimes that can take 3, 4, 5 hours. It depends. Every day is going to be different. So you'll notice that here is the, let me go to the open. So here's the 6:30, which is, I'm California time. That's actually 9:30. That's when the market opens. So it's not a big move to the downside. And I can see by this activity that the whole thing is starting to slow down. And it's just now at that point, just waiting for some kind of a reversal. So this is the bar that I use to calculate this, that it's likely to go right back up and to some kind of a specific target. So I've got to have a target or I can't take the trade. Now, I've had this question quite a bit because I know that there are people on YouTube. I've watched some of their videos and they talk about all of their interest is just in the entry and they don't always have a take profit level. They know where their stop is, but they let the market tell them where the take profit level is. And I'm not here to say that you can't trade that way. That's not what I'm going to say. There's so many different ways to trade. All I'm saying is that based on the way I trade, I'm not comfortable getting into a trade without a target. I know where my target is, and that helps me determine my risk to reward. That's very important to me. Maintaining or managing the amount of risk and then calculating how much I think I can get on that trade. Or do I think that it's just not even a waste of it, that it's not even, I shouldn't be wasting my time on that trade. If it's not going to produce enough profit based on the amount of or the size of the stop loss, then I'll just pass on it and look for another opportunity. Eventually, it's going to move in a way that lets me minimize the stop. So I'm saying all of this because I want you to know what my thinking is, how I think behind these trades. That way you know what you're going to get, because whatever I trade, how I trade, that same trade that I execute goes into my own funded account, and that's the same trade that my trade copier will copy for you. So you're going to get the same results. You're going to get somebody who's looking to protect their capital, is looking for a good setup, is reading the markets bar by bar. That's all I'm doing. So as far as US 30, I don't know what kind of day. I mean, I'm going to continue to watch it right into the close to see if maybe we get a little bit of activity. It moves in cycles. Sometimes, during lunch, it slows down. New York time, and then it'll pick back up. Other times it doesn't matter. Other times, most of the activities in the first hour of trading. Every day is a little bit different. So sometimes we also get a little boost or a little activity at the close, last hour, maybe the last 40 minutes, something like that. So I'll be watching to see if I can get another opportunity. If I can get a small little trade and that's all it gives me, well, then that's all, the day provides me. And then I can go back to the daily time frame and looking at the daily chart. Maybe it's just one of those small range days from the high to the low. Now, beyond that, I've been asked the question, what do I think is going to happen with Forex? Do I trade Forex? This is the dollar index. I keep an eye on the dollar index. And one thing that I've noticed here with the dollar is that we're getting these cluster closes here. That's the way I refer to it. Other people do too. But you'll notice on the daily time frame here, US dollar, this is just the dollar index by itself. This helps me gauge how what my expectations are if I'm trading Forex. It doesn't mean that because there's no trades here on the dollar that I don't have any trades on the pound dollar or the euro dollar. I do occasionally. But what I'm trying to gauge is what kind of setup should I be looking for? What should I be prepared for? If do I expect that we're in a trending market here? Sometimes they do correlate where I see the activity that's sufficient here in the dollar and it's going to trend, or there's a severe reversal, something like that, where I get a good opportunity and I can go over to the euro dollar or the pound dollar and look for a really good setup there. That doesn't always happen. Sometimes the pound dollar will go off on its own and it'll do its own thing because of UK economic data. That's always a possibility. But based on these cluster closes right here, the way it looks, I mean, this is going on for the last 4 or 5 days, and this is today's current bar. So again, today's Tuesday, it's September 20th. I don't know where this one's going to close, but I'm going to keep an eye on it. This is a pretty important high for me. So I'm going to see where today closes relative to this high from September 1st. Now, I'll make another update later for those of you who are interested on my thoughts, but this will help me gauge. It may be that it stays inside of this little range of consolidation. And if that happens, that's okay too. It doesn't matter. It just gives me a better sense of how long I could expect to hold on to some of my trades in the Forex market. Euro dollar, pound dollar, things like that. I can't expect a huge move unless there's some serious issue in that particular country, that zone, if it's the Eurozone or the UK, that might affect that particular currency. That's all I'm trying to gauge. It's not really important. I mean, I'm aware of economic data. That's another question I get. Do I trade the news? I used to trade the news. I loved trading the news back in 2004 and 5 and 6, but I don't do that anymore. It's not necessary, and I can't guarantee, or no one can guarantee, that everybody's going to get the same fill. So I stay away from trading it. However, the news does set up opportunities for me. So I will. It's either a setup before the news, a setup after the news, but you don't have to worry about me trying to jump in the split second that the news is released. That can turn into a nightmare scenario in some cases. I've had that happen to me where you have no idea what kind of fill you're going to get if price is moving quickly. And if everybody's using my trade copier, I don't know what they're going to get filled at. So it would be a nightmare for me to try to do that to people. I would never do that to you. I wouldn't even do it to myself. I don't do that anymore. There's no reason. There are so many choice opportunities. either as a result of the reaction from the news or just simply waiting. I mean, there's nothing wrong with waiting because there's always another trade. The market's not going anywhere, and there are so many opportunities. And it takes a little while for new traders to adjust to that kind of thinking. Everybody's thinking, I got to make money now. I got to make money today, and that's true. I mean, we all want to do that. I want to do that too, but I don't force it. I used to force it, and it was horrible. My results were I dug a deep hole for myself. I lost like half of my trading account in the first year of my trading. And it was because I was using candlestick patterns and I was using Fibonacci and stochastics and all that stuff. And I didn't know how to use it. Like I didn't know what I was doing with it. So you can see now, again, I say this all the time. My charts are very clean, very simple. I basically just use bar charts. I'm only interested in the close of the bar. I don't care where the open is. I mean, sometimes I'll give it a quick look, but for the most part, it's the close for me. And I'm reading the activity in these bars. I learned how to do that, and I use volume. Volume is very important. It's pretty much the only indicator that I use, and it is that effective. The longer you stay in this business, the easier you're looking to make things, and the more you strip away the stuff that doesn't work anyway. When you last, enough time in this business, you realize none of that stuff's necessary. So it's been a relatively slow day, I would say. Not bad, no losses. But I really can't say what's going to happen here in the Forex market. It's going to be interesting. Here is the euro dollar, and then I have the pound dollar over here. Two different time frames. Here's the 1 hour on the bottom left, 1 hour on the bottom right for the pound and the euro. And then I've got the 5-minute charts, of course, using volume. Just keeping an eye on it. It looked like there was a little opportunity, but I stayed away from it. Didn't look like it was going to go very far. So I'm waiting. Again, I think that as long as we stay in this range right here in the dollar, it may be a little bit choppy for the Forex, at least the majors that I trade. Some of the others might break out for their own reason, like I said, and that might be due to whatever's going on in that region, that part of the world, or for that country and that currency. Thank you very much for watching this video.